So for the past couple of weeks, the big tech stocks have been lagging the market, and this video is going to be solely about some of these stocks to see if they're going to be approaching support soon or do they have more room to fall. So the first one is CrowdStrike that we're going to talk about, and this has been kind of the talk of the town on Friday, and everybody was wondering what's going to happen to it. So I'm going to start with this one just to show you my thoughts. And CrowdStrike here on the weekly chart. I have my GAN pulled up since the bottom here of 2020, since COVID. And we can see one thing, that this is the 45-degree angle. And we can see how important that angle is as a support and a resistance. And now what do we see happening? Well, it's looking like it's kind of breaking the 45 once again. Now, it's still pretty close to it, and it has broke it before here back in April of 2024, but just to continue higher again. So we're going to need to wait to see next week if there's going to be a continuation down or will it rebound back above the 45. And if it does rebound back over the 45, then it could continue to head higher and higher back to the orange level. And it looks like everything flashed a warning sign before that Friday crash anyways. And we can see that by essentially the week before, it hit the orange level perfectly right up there and closed the week much lower. This was an indication that this is done going higher temporarily, right? Because it could not get past this resistance plus this big 4%, 5% weekly candle down was an indicator that it's not ready to continue higher. So it's probably a good idea to maybe take some profits. So this was a warning sign, right? Once it hits a level, then it's probably going to continue lower. And sure enough, it went back down to test this 45-degree angle again. And currently it's a little bit below. So next week is key. But do you think it's going to get down to this bottom arc again to test that, maybe in the 250s or so? Let's put on some other indicators to find out. We'll start with the Ichimoku, and we can see that it did close also below the conversion line and the baseline here, and it's approaching the top of the cloud, which currently sits around 265, 264 or so. So that could lead to the price being like a magnet to the cloud in order for a continuation higher, right? Or if more time goes on, then it could just go drift sideways until it reaches the top of the cloud here around the 290s and then continue higher. So it's not necessary to come back down and retest this arc because there could be some support before then, right? And if we add the confluence of our SMA, we can see that it is sitting currently at 268. So maybe by next week or the week after, it'll slowly drift higher, which could also line up with the top of the cloud in like that 290 zone as well, right? So we can see more confluence coming towards that 290 zone, which it did hit that 290.10 was the low on Friday, right? So it's possible that that could be the low because it already hit that 290 zone, which is still technically a higher low from here and from the previous higher lows here. So the market structure is still very bullish. It doesn't necessarily need to come back down to this level. It could just drift sideways until it gets to the cloud, touch it, and then continue higher. Or next week, you could just start to close candles back above this 45-degree angle and then continue higher that way. So this is looking pretty close to a support zone with current price and maybe possibly a little bit lower. So let's add the confluence of log scale onto this as well to see if we can see if price really will hold around these levels. So I have log scale chart pulled up on the monthly chart now for CrowdStrike, and we can see that it's trying to flip this top arc to support. Now, there's still 10 days left, 11 days left into the end of the month, right? So it's currently below the top arc, but it still can close back above. And as long as there's a monthly close above like 310, 311, 312, I think that would be good for a possible bottom signal for a continuation higher. And another thing is, if we put on the monthly Ichimoku for CrowdStrike, it didn't even test the bottom of the conversion line yet. Almost, right? The bottom of that is 286.57 and price got to 290.10. So this is another indicator that possibly it will not get lower than that 290 level because this conversion line of the Ichimoku is holding as support. and it's been holding as support for a long time, ever since it broke out with this 33% monthly candle here back in May of 2023. So it's been support the whole time. So it still could be the trend is your friend for a continuation higher. So it'll be key to see where this monthly candle closes. And if it closes back above this arc, then it's probably a good sign, right? So going back to my linear scale chart, I just wanted to show you guys that it's looking like max pain is very, very near. Like this could be the bottom right here. That 290 could be the bottom, and it could just continue higher from here. But I think worst case would be going back to retest this 50-week moving average at 268 currently, right down there. I think that'd be worst case. So if you enter around this price and then dollar cost average on the way down, I think it would probably be a good thing for a continuation higher because this chart does not look bearish at all. Right? So despite what happened on Friday, this chart still looks good. It looks really healthy, and it looks like support could be very, very near. And next we're going to do NVIDIA, and this is the weekly chart with my GAN pulled up, and we can see something very similar that on the weekly chart, it also hit the weekly conversion line at 116.97, and it closed the week above. So if we look back in time, this blue line right here, it's been support the whole time, except for this 1 week where it was down 13%, right? The next week it closed back above, right? But since here, it's been basically support since 2023, and the trend is also still your friend. So that means this could hold for a continuation higher up towards this green level, which would be around 144, right? Now, I want to point out that if this does not hold, then we have a big support zone beneath it, right? Starting with this 45, which is around 109, then the arc, which is around 105, 106, then the baseline there, which is around 99.67, and then ultimately we have the blue level, a successful retest of that blue level, which would sit currently around $96, right? So we have a big support zone for NVIDIA, starting with current price, right? So if you're worried about it, maybe you could wait and see what price does. But I think the higher time frame trend is still higher because it never really got to this green level up here, and usually price gravitates to that. So I think any weakness would be an opportunity for one to accumulate for price to continue higher and higher to that level and beyond. And even more confluence brings me to my log scale chart. Right here, the log scale chart, we can see that price is at that green level. It closed a little bit below, right? But that does not mean that it's going to continue lower, right? Because we can see it wicked below before, and this could be just a fake bear trap and continue higher. And this 3.618 level right here at 159, 160 level, I think that will be the ultimate target because it never reached it yet, right? And this is the extension level from the financial crisis from the 2007 high, right? So we can see that there's still room to run, and we can see that support is still holding, and maximum pain should be around this price, around 99 to maybe $96 or so for a continuation higher. So if you're looking for an entry, this zone, it's pretty wide, but it could be pretty solid, right? But so far, since this level is holding the conversion line, I think that could be as low as it gets. But we're going to have to wait and see for the weeks to come because that will determine everything. And if next week does close back above this green level, then I think it will continue higher and higher, right? Because there is no damage at all done to this chart. You just need to wait and see. And no matter what, any weakness, I think, is a good thing for accumulation to continue higher. And next we have SMCI, Super Microcomputer, and this one was similar to the other ones where it had a bad week. It was down 12%. And this is actually closing really close to a support level. And this support level right here around 770 was almost hit, right? It went to 774 on Friday, but it did not quite get to that 771. So could we see a continuation a little bit lower? It's possible, especially since the base or the convert yeah, no, the baseline is at 819 right there, and price closed the week at 796. So it is possible to see a little bit more weakness since it did close below the conversion and the baseline, and it never really hit that orange level again. So we could see that 770 get hit. We could see it maybe wick a little bit below, but it's looking like this wick right here around 741 could be the low, right? Because it's making a series of higher lows right here. So we'll see, we'll keep an eye on this to see if this level will hold, but it's looking like we're currently close to, if not in, a very good demand zone, a good support zone, right? And the 50-week moving average does stay here at 574, but I don't think it'll need to get there because this orange level is holding quite well as support. And we can see it's just drifting closer and closer to the cloud, which would be more confluence that this zone is going to hold as support for a continuation higher up back towards this 45-degree angle and towards this blue arc as well around $1,000, maybe 1,100 or so. So it's looking really nicely at support. Let's check out log scale to see if there's more confluence. And log scale is showing similar things, except it's showing this bottom arc right here. This green arc is kind of at resistance right now, but it's also acting as a magnet for price. So it probably will not drift too much lower since it's going pretty close to the arc. And we can also see that this orange level right here in the past, right here, was very, very important. Finally, it broke out above, and then it got to the blue level, which it came back and successfully back tested, and then it broke out above back to this angle, and now this is at resistance, right? So it's really, really just consolidating for some time for a break higher to the green level. So the orange level was hit, the blue level's hit, the next level does sit here around 1,800. And since price has not touched it yet, I can see over time it drifts higher and higher to finally get to that level. So the first step would be to break above this resistance of that arc, which currently sits around like 860. Then the next step would to break above this arc up here, maybe around 1200 or so. And then after that, it would continue higher and higher into next year and ultimately get to that 1800 price target. So log scale is looking really, really nice for continuation up. It just needs to break that resistance. And when you look at it, when you zoom out like this, no damage has been done at all. It's just a little volatile. And it looks like it's almost ready to break out higher from this arc because on linear scale, let me just take this off. You can see it more clearly. On linear scale, this level is holding so perfectly, right? So we just want to pay attention to this 770 level. If it wicks below, it's fine, but this is a very nice demand zone for a possible continuation higher to break that resistance up above. And next, we're going to look at Amazon. And Amazon had a negative 6% week almost, and it's looking like it's just holding, or it's going back to a support zone. And we can see the levels here. The orange level was hit perfectly, right? Came up, even back tested it right here. Then rode this angle up, back tested that angle. Then this blue level was perfect as well. Back test, support, 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 right? Even a resistance right there. And now what do we see? We still see this is the 45-degree angle. We see price is still above that angle and it's writing it as support. We can see how perfect this support zone has been. Just zooming in a little bit right here. We can see support, 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 right? Resistance and support, support. And it could even come back down to retest it as support again around 178, 179, 180 or so. Since it did not do it this week, it could come down next week to do that. But if price does go below here to 180, 179, 178, I think that would be a good spot to possibly accumulate for a possible chance for price to continue higher and higher to the next level. And that next level does sit here around 217, 218, right? That would be the next level. And then possibly the green arcs above 220 or even 230, 240, right? So this chart is still very, very bullish. All it's doing is pulling back to a support level and it's almost there. And if we look on log scale here, we can see, we zoom out, it still has a ways to go to the next level. We can see this green level was hit right here and now it's drifting higher and higher to the next level, which sits around 340, right? And if we add on the Ichimoku here as well for confluence, we can see the same thing as other charts. It's closing above level still. It did close a little bit below the conversion line, but it's still holding the baseline as support. And that baseline does sit around 177, which kind of coincides with that 45-degree angle that I showed on linear scale around 180, 178 or so. So just a little bit more pain, and I believe this is going to find a bottom soon for a continuation higher. So nothing to worry about this chart either. It looks really good. It looks really healthy and possibly a little bit lower for a chance to get a better opportunity to buy. And next we have Meta, and Meta is also very symmetrical as well on linear scale. We don't really need to use log scale for this because this chart is saying everything. And we can see that this is the 45-degree angle. It was resistance here, and now it's been battling it currently as a support and a resistance. And currently it just dropped below that 45-degree angle again. But what did price just do? Well, let's zoom in. Price just went back to this orange level again, right here, and it successfully backtested it here for a possible bottom and a possible chance for a continuation back higher. And if we put on the Ichimoku with that, we can see that it also hit the baseline of the Ichimoku at 461 and bounced and closed above it. So right now it's in between the baseline and the conversion line, and it's in between this, basically this supply and demand zone, right? So this is some sort of resistance right up here around maybe 500. And we can see that support is down here around 460. So it's kind of just stuck in a range until it's able to finally get back above this 45 and the conversion line to continue higher and higher. But as long as this level holds, and even the bottom arc could be maximum pain, right? Maybe around 420 or so. That could be maximum pain if this level gets lost. And then as time goes on, the cloud and the arc here around the 420s does meet around August 2024. So if there is more pain in the market, it could just drift down to sideways until it hits the cloud and then finally continue higher. But the trend is still higher, right? We can see it's a series of higher lows right here. This low and this low is still higher than that low, right? So we can still see a continuation higher, and nothing is bearish about this chart at all. And the next level, in fact, does even sit up here around $900. So that would be the ultimate target as long as price flips this 45-degree angle back to support. But it already looks like this orange level right here is support, right? It looks like it's support for continuation higher. So there's really nothing to fear. And I think any more weakness from current price down to the 460s, or even worst case, maybe down to the 420s, would be a great time to accumulate for price to finally continue higher back to the 45 and back to the blue arcs, and finally the blue level around 900. So I would not be fearful around support. You should be bullish around support. And lastly, we're going to look at Google Alphabet, right? We're going to look at this and we're going to see that price is perfectly symmetrical. We're just going to look at it on linear scale and not log scale because there's no need. This chart is saying everything, right? We'll go zoom out a little bit so we can see how symmetrical it has been with the angles down here, the level here, the orange level, then the blue level, right? We can see how perfect then that arc and the blue level. And exactly what is it doing now? Well, it hit a resistance, right? It hit the top arc and now it's hit exactly the bottom arc. So it hit support, right? This hit support almost exactly. So could it wick a little bit below next week and then continue higher? It sure could, right? But this is currently at a support level. And if we look here with the SMAs and the Ichimoku, we can see that it did close a little bit below the conversion line there, the blue conversion line, but it did hold the GAN level. So because of this GAN level, I don't know if it'll come back down to this baseline here around 161. I think could be all you see for the pain for possible consolidation to continue higher. And since these moving averages are way down south here, there's really no need for them to go way down there. They just need time to pass to allow these moving averages to catch up to price. So let's watch the next week's candle. If it closes back above that conversion line above 180.60, then I think it'll be good to go to possibly retest the resistance levels above in the 190s. but that could be some resistance for some time, right? We could see it maybe come back up, get rejected again, then come back down, and just be like a little washing machine up and down, right? So it's just going to be more time before price breaks out. But this chart is not bearish at all. I think right now could be the demand zone to try to get in. Worst case, it could come down to the baseline here, but I don't think that's necessary. I think in enough time, the baseline will catch up to price, and then that will be okay. So I don't think it'll necessarily be needing to drop any further. I think support is very near, and the point of all these charts that I just showed you is despite the recent weakness we've seen in the past couple of weeks, they are really close to support, if not at support. So if you're looking for opportunities for big tech, I think it is kind of presenting them to you in your face right now for an opportunity to get in for a continuation higher, but there probably is no rush because they could continue sideways for a little bit before they continue higher.